What's up everyone, it's Kadi with MoneyVest, and in this video I wanted to go over the S&P 500's fair value and where I will personally be getting more involved with buying and of course be a net buyer in the market, start deploying some of that dry powder that I've been hoarding, and of course I've been increasing my cash exposure as the markets have continued to go higher and higher. And what would be that level? So we're going to do an actual intrinsic value calculation on the S&P 500. So hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel, and link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas, and the intrinsic value spreadsheets. I am going to be updating that with more stocks, and we'll be adding more to the watch list with their fair values as well. And of course, the members only private videos also available with the link down below. So we'd love to have you on board. And again, there is a 16% annual discount available till the end of this month. Link's going to be down below. So when it comes to the calculation itself, there's obviously a lot of variables at play, right? More so than an individual stock, because obviously with S&P 500, we're looking at an aggregate of over 500 companies that are part of the overall index. So it's not that easy of a calculation, but I'm going to try to simplify it as much as we can. This right here is going to be that earnings forecast from Yardeni Research, and they are considered to be one of the top research platforms out there when they are kind of putting together consensus for the earnings per share for the S&P 500, which is going to basically be from $218 per share, which was in 2022, and by 2025 the expectations are $270 per share, right? That's going to be a compounded annual growth rate of about 7.4%, which is actually very reasonable. In other words, it is actually very aligned with what we have also seen for S&P 500 in the past. This right here is another spreadsheet that I've been tracking, which basically gives us the overall S&P 500 value and the earnings change and the PE multiple for S&P since 1960, right? So we are basically going back a little bit over 70 years or 60 years to basically understand what the earnings growth has been. So if you scroll all the way at the bottom, what you will notice that the compounded annual growth rate for the earnings has been a little bit over 7%, and the price itself has gone up by just under 7%. So they are very much in line with each other. Earnings is really what's driving the price, and that's why the PE multiple is almost, I would say, constant at around 17 to 20 levels. So this right here, 17.5 is the long-term average for S&P 500's PE multiple. Again, if you take the average over here, this is going to be that average at just under 17. So this is the median, 17 and a half. This is the average at just under 17. So these are some of the base rates, as I call them, right? So they are very sort of average rates. They're the base rates. Anything above that is going to be an optimistic scenario. Anything below that is going to be a very pessimistic scenario. The valuation, anything that's a little bit over 17 and a half is obviously trading above its long-term average. Anything that's below 17 and a half or 17, for example, it's trading at 14, 15, would be considered as an undervalued level, at least in my opinion, for the S&P 500. Okay, so now that we have an earnings expectation, right, we have a growth rate, we have a P multiple, now we can start to kind of build our spreadsheet and figure out what the fair value might be for S&P today, right? Because right now it's trading at just over 43.69. So we're a little bit over 4,300. Now, I want to be very clear, and I want to make that distinction once again. The intrinsic value is not the same as a price target. Intrinsic value is also not the same as your buy target. Those are three very different things. Let me explain. Your fair value is the same as your intrinsic value. That is the value that you believe that that asset or particular stock or index should be worth, right? That's how much it's worth, okay? That's the value of that thing. Your buy target, since you are trying to make a profit, right, should be obviously lower than the value, right? Because let's say that you want to buy something as simple as this lamp, right? I have a lamp over here, this lamp, right? This lamp, let's say that the value of this lamp is $100, right? Let's just throw this number out there. The value of that lamp is $100. $100 is how much that lamp is worth. If you're trying to make a profit by buying and selling that lamp, what would be the prices that you would be willing to basically pay for it and then sell for it? you certainly wouldn't be buying it for $100, right? Because that's how much it's already worth. That's the value. You would want to buy it for under $100, right? You would want to get a good deal, right? So you want to buy it at $70 or $80 and build that margin of safety. So you buy it at $80 and then you would want to sell it for something that's above its value at 120, 130. A buyer comes in, pays you a little bit higher. That's the whole idea. Okay? So your fair value or intrinsic value is how much something is worth. Your buy target ideally should be lower than the value because you want to buy it for a good deal. And then your sell price, which is your price target, should be something that's above the value itself, or theoretically should be higher than what you paid for it. So that's the whole idea behind this analysis. And of course, most of the analysis that we do, we have the fair value, we have the buy target, we've got the flexibility range, and we've got the price target. Okay, so now what I'm going to do is I'm going to plug in a 7.5% growth rate for S&P 500. So that's going to be the growth rate for earnings over the next 3 to 5 years, and that's been the long-term average for S&P as well. Then we get a PE multiple. I'm going to apply a 17 times PE multiple. I think that's very reasonable. The discount rate is going to be an interesting calculation because they do pay a dividend yield. S&P obviously has a dividend yield of about, I think 1%, close to 1%, 1.5%. So 1.49% is actually the dividend yield on the SPY. So we're going to go ahead and plug in a 10% discount rate for S&P. Most of the times we do 12% because we need a market beating return. Why am I not doing a 12% over here? Because this is indeed the market. So we don't want the market to beat the market, right? That doesn't make any sense. So we're going to go with 10% here because they do pay a dividend yield. In fact, we could even go lower. We could actually even go as low as 9% or even 8%. Like we could go lower in the discount rate because we're analyzing the market and not the stock. So with the stock, we want a higher discount rate because, like I said, we want the stock to beat the market. But since we are analyzing the market, we can go lower. 9%, let's just go with that one. Margin of safety, we're going to plug in, of course, 10%. And the share dilution has been a little bit over 6% over the last several years, actually even the last decade, thanks to Apple, thanks to Google, thanks to Microsoft. A lot of these companies have been buying back a truckload of their own shares, so negative 5% here. And guess where the fair value ends up? 4,000. Okay, that's the fair value for the S&P 500 based on these estimates at the moment as of today. And of course, right now it is trading at 4,370. I think last time I checked, 4,369. So 4,369 is where we are. That basically means another potential 8% downside needed for the S&P 500 to be trading at its fair value. So 4,021.98 to be precise is my fair value on the S&P 500. And again, you can come over to the sensitivity grid. You can take a look, different growth rates, different PE multiples will basically bring it to a different fair value. So if you go actually lower 15 times PE multiple with an 8% growth rate, or 7.5 to be precise, we're looking at 35.50 as the fair value. And right now, since the market is trading at closer to, I would say, 18 to 19 times earnings multiples, we are going to be looking at around here, so 4,500. So that's about a 21 times PE multiple, 21 times PE multiple. So this right here would be kind of like the area where S&P 500 right now is valued at, right? 21 times earnings multiples, and the growth rate is lower because we have seen a significant slowdown in earnings, so that's why it's a little bit over 4 to 5%, even as high as 6%, but the long-term average, as we know, is 7.5%. So I do expect things to normalize from an earnings standpoint, but this right here, like I said, is going to be my fair value for S&P. If you bring up the technicals, that is going to basically be somewhere around these levels over here. 4,100 is going to be actually over here, but I would love to start deploying more capital if the S&P ends up at 3,700. So this right here would be the buy target for a lot of individual stocks and for the S&P in general, because like I said, it would be undervalued trading below 4,000 points in the future, if and when it actually gets down there. So that's where we are. That was my fundamental quick analysis on the intrinsic value for S&P. We do still have this higher highs and higher lows. So very, very strong momentum to the upside, and a more reasonable support with that 21 EMA at 43.20s. Of course, a breakdown below this level could send us down to low 4200s, 4150s, even at those prices. That's going to be that support level. And of course, my fair value 4,000 with a buy target closer to 37.75, 37.50. So hope you guys enjoyed this video and a complete update on the S&P. Let me know your thoughts down in the comment section below. What do you think about this? Are you buying, selling, holding? I would love to know from you guys. As always, if you enjoyed this video, found it helpful, make sure that you drop a like. Don't forget, there is a 16% annual discount available till the end of this month. So always happy investing, and I'll see you all in the next video.